In today's video, I'll be delving into the latest developments surrounding SoFi, breaking down the essential data points, analyzing what's really driving the market, and discussing everything you need to stay informed.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi's stock closed flat today, but in my opinion, that's not necessarily a bad thing. Even though the day was relatively quiet and uneventful, SoFi managed to avoid being driven down below the nearest strike price. While it might seem like a dull day on the surface, this is actually a positive sign, showing that the stock has some resilience, even in a market that hasn't been particularly active. They were able to close above a key strike price, though it wasn't a major barrier to begin with. I'll dive into the specifics of this in just a moment, but first, let's look at today's numbers. The low for today was $6.55, with a high of $6.73. This range will make more sense once we go through the technical analysis shortly. Today's trading volume was notably low, with only 18.9 million shares traded, compared to an average of 41.9 million shares. This wasn't unique to SoFi. Overall market volumes have been lower than usual across the board, continuing the trend we saw yesterday. This low volume suggests there's still a significant level of fear in the broader market. The Fear and Greed Index remains in the extreme fear category, currently sitting at 24. A month ago, I mentioned that there was likely to be a significant shift from money markets back into equities, particularly with the optimism surrounding potential rate cuts. However, given the events of the past week, it seems the opposite might be occurring. It appears that money is moving out of equities and into money markets and bonds. Institutions are evidently cautious, as indicated by the small number of large transactions today. Only 2 transactions over $100,000 were recorded, which is a sharp contrast to the 10-15 transactions we typically see. This is highly unusual and suggests that many institutional investors are sitting on the sidelines for now. The bulk of today's trading volume was driven by short selling and algorithmic trading. This brings us to a key point I want to discuss: the ongoing reduction in overall market volume. This trend supports the theory that money is flowing into bonds, which tend to move inversely to interest rates. With the possibility of interest rate cuts, bond prices could be expected to rise, making them an attractive option for investors in the current environment. Looking ahead to the September 18th Federal Reserve meeting, there's a 48.5% chance of a 50 basis point rate cut, down from 57% yesterday. This suggests that the market is beginning to normalize after last week's heightened fear. Last Thursday and Friday, there was a 90% chance of a 50 basis point cut and a 10% chance of a 75 basis point cut. While the market is still apprehensive, it's not as panicked as it was last week. The market has been incredibly volatile lately, and it's worth considering whether this extreme fluctuation where stocks can swing 10% up or down in a short period is becoming the new norm. Today, most of the volume in SoFi's stock came from short sellers, who increased their positions by 4.36 million shares. The short interest now stands at 17% of the free float, which equates to approximately 177.94 million shares. The cost to borrow shares for shorting has also ticked up, with the average cost slightly lower than Thursday's figures and a minimum cost to borrow at minus 0.2%. This increase in short selling suggests that some investors are betting against SoFi, expecting the stock to decline. Interestingly, there was a significant sell order for 590,000 shares this morning, followed by a buy order for 100,000 shares. This ties into another point I want to bring up: the availability of shares for shorting. Typically, SoFi has more than 10 million shares available for lending, but this morning, that number suddenly dropped before rebounding to over 10 million. This pattern suggests that a large entity, possibly BlackRock or Vanguard, is buying SoFi shares with the intention of lending them out for short selling. This isn't necessarily good news for SoFi, as it indicates that these large institutions might be facilitating more short selling in the stock. It's important to analyze all these seemingly minor details because, when pieced together, they provide a clearer picture of the underlying market dynamics. For instance, if an institution with millions of shares is lending them out, it can significantly influence the stock's movement. As we look forward to next week, there are some opportunities on the horizon. The current open interest in SoFi's options suggests that with SoFi closing above $6.50, market makers may need to cover 1.2 million shares when the market opens on Monday. This could potentially lead to a slight bump in the stock price. Looking at the options chain, we see 35,000 contracts at the $7 strike price, 24,000 at $7.50, and 38,000 at $8. These figures indicate that next week could see some upward momentum, possibly pushing the stock towards the $7 mark. However, it's important to note that there's a significant resistance level at $7, and market makers and short sellers will likely work to defend this level. Technically, SoFi's stock bounced off a strong support level at $6.55 today. The next significant resistance level is at $7.07, but there's a substantial resistance wall at $7. This means that while there's potential for a run-up to $7, breaking through that level could be challenging. I'll be discussing this in more detail, along with a broader macro perspective, in my weekend video, which will be available on Sunday. Over the past few trading days, we've seen a lot of consolidation and volatility in SoFi stock. If you haven't already, I highly recommend learning about options trading, as it can be a very profitable strategy during times of uncertainty and volatility. Right now, the stochastic indicator is around 25, which suggests that the stock is still oversold. If some positive news comes out, we could see value investors rushing back into SoFi. It's also worth noting the behavior of retail investors over the past few trading days. While we saw some buying earlier in the week, it appears that retail investors were selling today. If you're one of those who sold today, it might be because you're worried about potential risks over the weekend, such as geopolitical tensions in the Middle East or other unexpected events, often referred to as black swan events. To wrap up, while today might have seemed uneventful on the surface, there's a lot going on beneath the surface that's worth paying attention to. The low trading volume, the behavior of institutional investors, and the current market sentiment all suggest that caution is still prevalent in the market. However, there are opportunities for those who are willing to dig deeper and understand the nuances of what's happening. So keep an eye on the key levels we discussed and be prepared for potential volatility as we head into next week. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.